All right, guys. So here we are. We're live. It's right before coming up on the open here. And this is kind of what I didn't want to happen in Tesla. Okay, so what we're doing here is you're joining me as we're going to trade Tesla on the open here. And my position right now, if I get out of the way, is that I'm long deltas down here. The essential position is like a big condor in that as long as it stays in a certain range, I do well. But the more it breaks to the downside here, like it's doing right now, that's not good for us. We'd love it to go back to like 730 right now. So if I pull up a chart here, it's going to show you my P&L, and you see it drops off precipitously to the downside. You know, if we break below 790 here, that's not going to be good for me. It would be nice if we could just rally up a little bit into the open, but we can't always get what we want here. So the strategy on the open, and you can see my deltas here on the bottom, long 20 deltas. So 20 bucks we're losing every point it moves lower from here. And if we look at the chart, we can see that this really just broke down in the last hour or so. Look, we were all the way up around 765 at 4 in the morning or something, and we've broken down way down off of here. Now, I don't know if we're going to pop back up from here or not, but the stock came obviously from way lower a while ago, so there is the chance that we break $100 on the open. It's certainly possible. So I'm going to try to precipitously, if we start to break here on the open, the decision is, do I cover my downside or do I hang out and see if we kind of pop back up above 700? We'll have to see what happens. The other thing I wanted to talk about, all right, so here's the position here, and it's basically I'm short call spreads to the upside and I'm short put spreads to the downside. And most of it, a couple of them are expiring in 2 days, but the majority of it expires on the 21st of February. And biggest part of it is that I'm short this 650, 630 put vertical here. It's really annoying with these screens because there's so many strikes, and just to get through the strikes takes forever. So I'm short the 650, 630 put spread 5 times. So that's a $20 put spread. So that's represents a lot of money there. I sold it for around half its value. I'm sorry, I didn't sell it for half its value. I sold it for around $5 each. Once again, it's a $20 spread that I sold for $5. So that's where our risk lies right now, and that's what I'm concerned about. The other aspect about this position, which is interesting, or you could say difficult to manage, is that to free up buying power to buy some of this stuff in, I might have to buy upside quickly to have the buying power to cover the downside, or I could conversely kind of take these trades off as a condor. So I'm buying both the upside and the downside at once. It really depends on what's going to be the best price. And so the really decision here, we've got E-minis are up right now. Like the general market is up right now. So there's as this kind of continues to break lower, this is the lowest point we've been at since 2 days ago, I think. Let's take a look here. Yeah, see, you can see we're at the lowest point we've been at in a while. Let me get out of the way here. And so the question is do we continue lower? And does it break lower on the open? Now, I just don't really want to deal with this whole thing. So what I'm going to do is I'm going to look to take my position off to some extent. Yeah, that's true, James Knight. I did not take my own advice here. I was attracted by how rich the premiums are. If we look at the price levels here, 115 volatility in a $700 stock, that represents high amounts of premium. Yes, I know vol is making money, as it's one of these things where if I just left my VIX position on, I would have made money instead of losing money. So there's that. All right, so let's see. We've got, and we can go back to doing that. We've got 6 minutes till the open. Fortunately, this position did make money yesterday. So we made, I don't know, about $500 yesterday. We got really good marks coming into the close the day before. So it was kind of deceptive. We were marked like $400 in our favor. All right, so the stock's coming back a little bit here before the open. The other aspect of this whole thing is like, do you wait for prices to settle down a little bit? If we bounce off this 700 strike a couple times, then people might psychologically feel like 700 is a place that they should buy it. Ciao, Stefano. Nice to see you. And thank you for your help with the VIX group. I trust you're getting used to the rhythms of accepting memberships and whatnot on there. All right, so I feel a little bit better. It looks like we're kind of bouncing off that 700 strike here. But yeah, I just like to take this position off to some extent on the open here. I apologize if people get upset with me for this not being like minute by minute exciting content, but I'm actually going to attempt to trade here in real time. So my focus will switch from making a good video to actually like trading here. And I'm not sure how well that's going to come across as far as being an interesting video or not. So we've got 2 minutes to the open. So let's just quickly look at, I just want to look at the term structure for the VIX for a second here. And, it's operating pretty typically in that we're kind of rolling slowly back into a contango situation here as we've had several days of rallying in a row. And that's sort of to be expected. And we're seeing 2% contango here. We saw with the spike, everything just stayed around 17. So it seems like there's some firm conviction out there that 17 is the average for this stuff. We didn't see like the back month futures like go up a whole lot on the most recent spike. It's sort of interesting. All right, so let's get back to our... All right, so now it's breaking below 700 again, 698. And we can put up time and sales to see just the tape. That kind of interests me sometimes. There's these buttons along the right side of your Thinkorswim, and this one's time and sales. The other one people will look at is level 2 sometimes. It's going to show, which houses are on the bids and offer. And I'm pretty much convinced that all this stuff is smoke and mirrors, so I don't pay much attention to it. I've asked Thinkorswim before, like, when it shows these time and sales, is this like everything that comes across the tape? Because if you look at it, you can tell it's not everything. Because, for example, we have done 1.2 million shares so far today in Tesla, and obviously they're not showing everything that comes across the tape. So I asked somebody from Thinkorswim, like, where do they get this information? Because I thought, well, maybe they could potentially manipulate this and just show you certain trades, but they buy this information from a separate company that produces the stream. All right, so that's weird. The times are off on my screen. It looks like we got the bell here. And let's go to, all right, so what all right, so we're 708. So what I'm interested in doing is taking off some of this trade. So what I'm going to do is I'm going to go to the bottom of the screen here, and I'm going to click on 4 of these options. And the reason I'm doing this is I want to click on 4 different options that I want to take off, and then I'm going to right-click, and it's going to give me the option. It's going to give me the possibility to close this order. So then I'm going to select the Iron Condor. So this one trade will take off everything at once. And so let's not do them all. Let's do like 1 or 2. You'll see how the prices are bouncing around here. And before it breaks much more, I want to see if I can take off some of these. So let's just see, the prices are bouncing around so much, but I just picked a pretty low price there, 7 and change. Yeah, it's definitely breaking, which isn't good for us. All right, so let's see where my order is. There's craziness out there because there's so many people trading this right now. Pull the chart up. All right, so we'll select our order on the chart, cancel replace. Now it's bringing that price. All right, so let's try this price of 960 here. Let's see if we continue to break lower. Yeah, it's pretty hectic out there right now. Let's go up to 980 on the one lot here. All right, so we paid 960 for a one lot, and that frees up a little buying power, but I really want to be careful on the pricing on this. Let's let this settle. It doesn't seem like it's just completely breaking to the downside right now, so. So I guess I'm just going to hang out. All right, so let's take a look at our deltas here. So it's showing our delta right now at long 11 deltas. And it's got these wacky P&L numbers. I'm not quite sure why that is, but that's not right. All right, so what we could do, we could continue to try to take the stuff off, or we could just try to just address that delta by maybe just buying in a little bit of the downside. But things are kind of in orbit right now, and yeah, that's a good suggestion, Edward. Nothing's really, it's not breaking to the downside, fortunately. So maybe we just kind of let things settle down. It's too hectic to try to figure out how to price a condor when stuff is going crazy. So what I'm going to do is I'm just going to look to, just buy in a little, maybe like one or two of those spreads to the downside, just to kind of even out our delta a little bit here. It's, it's a crazy stock, and it's crazy. It makes these crazy moves, so it's kind of touch and go. So we don't actually have enough buying power to buy one of these spreads, and we have 712 in buying power right now. We could buy one of these, though. So let's see, 675, 680 spread. So I'm going to highlight those two, create closing order. I'm short 3 of these. Let's try to buy 1. How about that? All right, so we bought one of those, and our delta is now to 7. You know what's going to happen, of course, especially since I'm doing this live. What's going to happen is as soon as I buy in downside, we're going to rock it up to the top, of course. Right? We're going to go straight up as soon as I buy in any downside. All right, so our delta right now is long 6. We seem to be hanging out around the 7 strike, but I don't want to mess with this too much because I just don't want to take that much risk with the money here. So let's hang out and see what happens. Like I said, I don't want to mess with it too much right now. We'll let it settle a little bit, and I'll come on later with some updates to the short vol and whatnot. But that's just a little bit. Let's see if this settles out a little bit, and we'll kind of work from there. Vols come in a little bit. Let's see. Position I have open in UVXY. Let's take a look at UVXY real quick here. All right, so we're in a little bit. The high on UVXY. Let's take a look over the last couple days. We've obviously seen it come back. It got up to 1475. Yeah, Edward, take the opposite side of me on all these trades. You'll make some money, maybe. That's hilarious. So we are VIX 1534. So it's kind of just, it's getting back in line, but I can't predict what it's going to do. And we're not in a super high contango period. So I wouldn't be big on any side of the trade right now because we're kind of in a mid-range right now. If you put the short on, it will work over time, but the question is just, how much size you want to have on right now because things could turn around pretty quickly. I apologize. You know what? I'm having a hard time focusing because I'm like I'm in the moment with the whole Tesla thing, and I'm distracted. So it's a bad time for me to do VIX stuff possibly. VIX is up slightly today, and it seems like a mid-range to me. I feel I can't tell you PR product when to take a trade off. So it looks like so March 6th, you've got the 13.8 put spread on. So let's take a look. It seems very aggressive to me. It seems very aggressive to me, that trade. I feel that what you're in danger of happening is with that put spread is that the option you've sold doesn't have much premium in it. The option that you bought does have a lot of premium in it. If you look at the call that's on the other side of the March 13 put, you see it has a lot of price. So essentially, when you buy a spread where the thing you're buying has a lot of premium in it and the thing you're selling doesn't, well, two things I can say. It starts to operate just like you're long a put. So I would be concerned about your daily decay on this trade, A. And B, when you compare just straight up buying a put to putting the trade you have on, it almost makes sense to just buy a put because, look, when you buy the 13.8 put spread, make sure, yeah. You're giving up the rest of that downside from 8 to 0 for what? The 8 put right now is 5-cent bid at 17. So, and the put you're buying is like a $2.50 put, and you're selling something that's like less than 25 cents against it. So if you're going to do this trade, it doesn't make sense for me to sell that actual put because it's not offsetting your cost very much. I would look to do a trade that's where when you're doing verticals, I would look to do a trade where the option you're buying is in the same ballpark as the option you're selling. So, for example, a better example might be like the 14.11 put spread or the 13.11 put spread. Then in this manner, as stuff decays, you're short one option that's decaying at a similar rate to the option you're long. If you buy the 13.8 put spread, basically the option that you own is decaying, and the option you're short has already decayed and is pretty much gone. Now, yes, certainly if you get down to that area, that option will have some value. But in the meantime, you've given up all the downside from 8 all the way down to wherever for that little bit that you sold the 8 put for. So in this case, I wouldn't sell the 8 put. So I would look to I would look at that trade as you're just long these 13 puts, and they're going to start decaying pretty rapidly soon. So my suggestion would be to possibly do something like buy the 11.8 put spread. That's going to turn it into a 13.11 put spread, right? So that you so that the option you're selling is also decaying along with the option you're buying, because right now you're sitting on some decay. If we model this, for example, the 13.8 put spread. Okay, so I'm going to put this. I'm actually going to model it as two separate options so that we can look at them separately. So analyze trade. And let's get rid of all these other trades that are on there. And then sell the 8 put. Come on, screen, you can do it. Okay, so then we'll get rid of all the other trades that are in my little thing here. Sorry, I'm getting I'm getting distracted with Tesla again here. All right, so there's that. There's the one put, and then here's the other. All right, so the point of this here, when I'm doing this, okay, so one trade is going to give you short 44 deltas. So the theta per day, let's make this into 100 lot here, just to like display it even bigger. Okay, so if you did 100 lot, it's going to cost you 240 a day in decay. That's a lot of decay per delta. And look, if you take away the put you sold, it doesn't change the decay very much. It changes it a little bit, but not very much. However, if this was like the 11 put, for example, all of a sudden your decay becomes negligible. So, one of the biggest advantages of using a vertical as opposed to just buying a naked options is that you take that decay out of the equation. And the strike selection you have with the 13.8, it kind of nullifies that. Look at when we have the 13.11 put. It's only $15 a day decay for that whole trade as opposed to 200 and something. And then you're just basically you're replacing shorting the stock. The reason you don't want to short the stock is A, it's hard to borrow, it's hard to get shares, so it's hard to short. And B, if it goes higher and higher and higher, you have to put more and more money on your account. So you'd rather do the put spread because you know how much you're outlying, and that's the most you can lose. The second huge advantage of the put spread versus a put is that you're not having to pay every day. You're not bleeding every day. Which is the case with the spread, the 13.8 spread, because the option that you sold is not decaying very much. I'm sorry, I'm getting distracted on Tesla again. I'm going to move back to that for a second here. And I'm just pulling up the daily chart here. So what we want to do is, I probably should have done something when we were up there, but I'm going to get queued up to kind of start to take this off because I really don't want to put myself in a situation where this breaks to 500 right now and I'm out a bunch of money. That's just not what I want to do. So I apologize for switching back and forth here. So one other way you can do things to quickly do trades here is I can go back to that. You can go back to your past trades and select them and pull them into the screen to do things quicker. So if I go back to my Iron Condor trade, I can say select duplicate order. And we can see that I probably kind of overpaid for that before. Meanwhile, Tesla, 693. See, it just feels heavy to me, and I really don't want it to break to the downside, and I'm just out a bunch of money because it's just not the game I want to play today. So there, I took off another one, and I'm just going to slowly wind out of this position right now, just because I just don't want to deal with losing money. Fear of losing money is a huge, huge motivator. All right, so 693. So let's see what our delta's 6 right now. I mean, the other thing we can do is just buy straight up downside. And if this bores you guys, I totally understand. You totally don't feel bad about just watching someone else or doing something else, because I'm not trying to be exciting here. I'm just trying to kind of manage my positions here. Is that what I want to be doing? All right, so we're going to take off another little thingy here. And now we're rallying again. It's like every time I buy something to the downside, we start to rally again. It's hilarious. All right, so I'm going to try to take off this thing here. But that's fine, you know. It's I'm you know, it's okay. I'm totally fine with it, you know, it going back up again once I take it off. It's just you know, because I'm okay with that because at least you're not losing money. You know, not making money can feel as painful as losing money, but it's not really the same thing. So let's just go ahead and buy the put spread and not the whole thing there. Long TVIX, huh? Yeah, I don't have a big conviction either way on volatility right here. It feels like kind of feels like the excitement is not completely over, but I could be wrong. It makes me scared when people say they're all in. I don't like the idea of being all in because you don't want to risk everything one day. Like a lot of people don't but when we had the Vomageddon, we found out after it that a lot of people had like their whole savings in XIV plus not only their whole savings in XIB, but on top of that they had like margin in on XIV, and it was scary because they lost all their money and margin. And after that, I started to tell people, look, everybody, we don't talk a lot about like people's like retirement savings and stuff like that. And you should, as you build up money, you should have other assets. You should have like, I don't know if it's real estate or maybe you just have like a 401k that's just long some market stuff, or you're in bonds, or you just have money under your bed. But you certainly should not have all your money in like, you know, some VIX trade. And I think when you say, James Knight, when you say you're all in, I don't think you mean that like all your life savings and your future, you know, you've maxed out every credit card, your life savings and all that stuff is in. Now, people do that kind of thing sometimes, and sometimes that's the way entrepreneurs actually become successful is they bet everything on one thing and it works out for them. They concentrate. And sometimes, you know, it's said that like to make money, concentrate everything. To hold on to money, diversify everything. All right, so I'm getting too distracted. I'm going to go and trade my Tesla by myself for a little while here and see if I can get out of this stuff. It's very difficult for me to be online and trading at the same time. But I just kind of wanted to show you guys sort of my thought process a little bit. You might see me a little later today, but in the meantime, best of luck to all of you. Thank you so much for supporting me. Thank you all to the Patreon subscribers. And I will see you in the next one. Let me roll the ending here. Bye-bye. Thanks, guys.